Happy Monday morning. Welcome to Wake Up Real Estate. It's Monday, January 8th. We're going to talk some motivation marketing and mortgage on a Monday because I love alliterations. We've got Jordan here. Ryan is, I think he's traveling. He's going from the cold weather up here north back to his Florida sanctuary. So he'll be back tomorrow for Texting Tuesday. But we've got some good stuff that we're going to share here that hopefully will help you put some more business in your pipeline. We'll kick it off with a little motivation. Texted this to my kiddos this morning. I can't tell who this is attributed to, but regardless, it's useful and helpful one way or the other. I've never met a champion who arrived at practice on time and left when the coach called time. Champions take it upon themselves to do more than what's required. It's the key reason why they are champions. Yes, that is a sport lean, but the reality is, if you want to be a champion in business, you need to go over and above, right? If you want to succeed in real estate or mortgage or any business for that matter, doing the bare minimum is not the way to get there. You have to find ways to over deliver, to put in the extra mile, right? To do the little bit extra that gets the exponentially greater reward, right? Doing a little bit more each day compounds greatly over time, each week, each month, each quarter, each year. Go the extra mile. And I don't think you'll ever regret that. So I want to talk a little bit about DSCR loans this morning. And the title that I put for our session here is how to invest in real estate with no income or employment verification. Now, on the surface, that seems like, it has to be too good to be true. But the reality is, with DSCR loans, that is 100% the reality. Now, there does need to be income. It needs to be income that the property is generating.
Yeah, it's based off the property itself.
Yeah, and you or your client, you need to be credit worthy, right? Generally speaking, Jordan, what's the bare minimum on DSCR, and then where are they in a better position?
You start taking hits on loan to value, so basically, you need more money down. Right. The lowest, though, with like 35% down is going to be like a 620 credit score.
Okay.
Right? 30% down roughly. But to open you up to all banks and start getting like a 20% down situation, which is like a normal traditional investment property, it's going to be about a 660 credit score.
Yeah. So you have to be credit worthy. There has to be income from the property, and you do have to have the capital to put down 15, 20, 25%, right? But you don't have to do income verification. They're not going to ask you for W-2s. You won't need bank statements, things of that nature, generally speaking, right? Which means if it's a good deal, if it is a solid income producing property, there is opportunity there. And what I would encourage you all to
explain what solid income property,
yes, please
what
do.
is a solid producing income property?
Let's define that. Let's define that.
It's really a wash on your mortgage payment on what the rent is. So we'll order something called a 1007, or we'll take the current lease, whichever is less. Okay. And as long as it's a 1-to-1 ratio or better, typically most banks are going to accept that. Okay. There are instances where it'll go less than one. So basically, explaining what the 1-to-1 ratio is if your mortgage payment, proposed new mortgage payment is $1,400, and this 1007 appraisal, which is just a market analysis of what that property will rent for from an appraiser, right. As long as that's at least $1,400, that is what we consider an income, worthy property.
And Jordan, the 1-to-1 is the 1-to-1 based on just the debt service? In other words, just principal and interest, or does it also factor in taxes and insurance?
It's all everything. PITI.
Which is it's important, right? You don't want to put clients or yourself into a negative cash flowing property. Let's be real here. So it's a good safeguard for yourself or your clients if you're looking at these types of loans and exploring these
There
types
are
of opportunities.
situations where, let's say someone's buying a property and they want to just buy it real quick and turn around, and they know they're going to make a profit on it in a year, or they're buying in a great, let's say it's a great buy and has a ton of equity position. There are situations where you can buy a property where it has a negative DSCR ratio. Usually the norm is no less than 0.25, or you're going straight to a no ratio one, which a no ratio one has different requirement. It's a whole different type of loan. It's a no ratio DSCR loan. But the norm is 0.75, right, of
So
a minimum.
the exceptions to the rule would be it's already leased. That you've got a plan and a strategy to increase the income amounts, right? So you may be buying it today with a less than 1-to-1, but you've got a plan to make that to turn that around. Or like Jordan said, you're getting such a deal equity wise that it just makes sense, right? To do the deal quickly, and then look at is it something that you're going to turn over quickly, or are you going to increase the rents and refi it? I mean,
Increase the rent. Maybe
Yeah.
it's way under rented, right? Kind of situation.
So tomorrow at 1 Eastern, Jordan and I are going to do a deeper dive on this. Now we did a session on DSCR back in November, I believe, but we've been working with a lot of these types of loans where people are requesting a DSCR for a purchase, for a cash out refi, even for DSCR second mortgages. And so we've been working to identify the best lenders out there that we have access to, and put together a matrix for how we can find the best programs or product based upon the situation. So though we have talked about this these types of loans recently, I just feel like it's a good topic to revisit, especially now with it being after the first of the year, and the fact that, and I want to tie this into marketing, right? Because we promised motivation, mortgage, and marketing. If you're a real estate agent listening to this, you may be wondering, like, well, how do I use these to A, market my business, and B, get myself more clients? Okay. Besides the fact that you should be, like, if you're in this industry, you should be using these loans to grow your own investment portfolio. And if you want to explore that, just reach out to one of us and we'd be happy to chat, explain in more detail, and even run a scenario for you. Maybe you find a property that is in your MLS, or that is an off-market option, and we can see if it pencils, quote unquote, right? Would it make sense for a DSCR loan? But from a marketing perspective, what I would highly recommend you do is go into your MLS, even if you're not looking for yourself, although using it through that lens, right? Trying to find an opportunity through the lens of, finding a good deal for yourself. If you find a property, when you find a property that pencils for a DSCR loan, you can present that to your database, to your social media sphere of influence, right? To your past clients, etc., and make them aware. Hey, did you know that you can get started with you can start your investment portfolio or grow your investment portfolio regardless of your personal income or employment. Here's an example of what that looks like. And you present the property and the breakdown. And I'd be more than happy to do that with you as well. If you have a property, we can go through it together to see, if it would make sense. And you use that to present an actual real opportunity to your market. I mean, I think what most of us do is we wait till we get the client and then we go find the property to fit the client. Why not reverse it? Go find a property that makes sense, that would make a great investment, that would fit the DSCR criteria, and present it to your possible clients or your past clients.
It's funny you bring those up, because a lot of loan originators do that with investors, right? So, I mean, it's something real estate agents definitely should do, I think. But originators themselves, they'll take a product or a scenario, and then they will go out and then they'll have a database of investors that they'll just shoot it out to and be like, hey, you can get into this for $15,000. Here's all in what you'd be in at. And it's a great way to market and develop a database.
Right now, when you present it, right, when you're presenting the numbers and so forth, you want to make sure that you're making it very clear that this is for informational purposes only, right? That this isn't a guarantee of return, but just alerting them to the idea and getting people thinking about the idea of starting or growing their investment portfolio is a great way for you to put more transactions into your pipeline. If you have 20, 50, 100 past clients, I guarantee you 10 to 50% of them are on some level interested in investing in real estate. They already bought their own home. Okay, so they've theoretically invested in real estate already, and if you present an option to them, it at least gets a conversation going for you. It starts the conversation, and in fact, because I'm talking about this, that's probably what I'm going to make my Friday content around, is presenting a deal that pencils DSCR to my database. And we'll see what happens. I'll certainly share on Friday what that email looks like and how I'm presenting it and what the results are, how many conversations and what kind of interest level. But I can tell you that you're going to create more opportunities by at least trying this than not, right? Just to wait for the clients to find you and then you go find the deals. Reverse engineer that thing, right? Reverse engineer that thing, create deals and bring them back to your existing clients, your past clients, etc. So that tomorrow, we're going to do a deeper dive on this. We're going to give more specific examples. We'll highlight some of the different programs and products. We'll talk about using DSCR to acquire, to cash out refi, and even second mortgage options. We'll do some. We'll even share some of the examples that we're working on. So right now, actually, just pulling back the curtains, when we're done here, I will be talking with Jordan about a client that reached out this weekend wanting a blanket DSCR loan. So they own 5 rental properties. I think they own them all free and clear, or there's very little debt on them. And they are exploring a blanket DSCR loan so they can pull out cash and then reallocate that capital to grow their portfolio. That's one scenario. I've got another client that Jordan and I need to review. They've got a 10 unit property that they're trying to pull cash out. They need to pay off a hard money loan that's coming due. So they need to pay that off. There's equity that they want to cash out a little bit to, again, to reallocate that capital to grow their portfolio. So there's lots of different opportunities and ways to slice this up. And the last thing I'll mention, and I'll mention this tomorrow as well, these types of deals are just another reason why you might want to consider becoming dual licensed. And if you'd like to explore what we call our RELO program, real estate LO, dual license program, you can go to wakeup.realestate/RELO, wakeup.realestate/RELO. Check out a short video there. It's for illustration purposes only, but it could be a great way for you to increase your revenue this year without you having to sell more houses. Okay. DSCR is one great opportunity. Our 5-day HELOCs is another great opportunity for you to increase your revenue without having to sell more homes. The refi boom that's coming, you get yourself dual licensed, you can participate in that refi boom and help the clients that you have who, no matter what you do, are not going to sell their home in the next 2, 3, 5, 7, 10 years because it's their perfect family home right now. But it might make sense for them to refi it, and you can be compensated by playing a role in taking care of them and servicing them through that. So I would highly recommend, if you haven't already, check out wakeup.realestate/RELO and let's chat to see if that would make sense and be a good fit or something for you to explore here in 2024. Tomorrow, 10 a.m. Eastern, Texting Tuesday. We've got a text script that is real estate investing centric, right? To tie it into the topic of today. Then in the afternoon, we're going to do a deep dive on Zoom, and we'll probably live stream it as well. And I'll let everybody know how you can join us in the Zoom room for that. Jordan and I will get an update out on that this afternoon or tomorrow morning. And then we've got our regularly scheduled sessions all week. Wednesday afternoon, our mastermind at 1 Eastern, Wednesday afternoon mastermind. I am going to, I've had a lot of people asking about my short form video process. So how do I create my short form video content? How do I post it? Where do I post it? What apps do I use, etc. And I've shared a lot of this over the last year and a half, but my process for it has evolved more recently. And so I'm going to do a deep dive on that, which you can join us for free as well at wakeup.realestate.
I'm kind of curious about that too. You post a lot, so.
What's that, Jordan?
You post a lot, so I was kind of curious about that too. I was going to ask you about that.
Well, and so here's why that's relevant. I'll tie that in. The two examples that I mentioned, where we have somebody that we were shopping for a blanket DSCR loan for multiple properties, and the 10 unit, they both reached out to me through social because of my post. One was TikTok, and the other was Instagram. And they saw short form video content. They reached out. It started with direct messaging, and it went to phone. I spoke to both of them on the phone on Saturday, and they sent information and details, and now we're exploring that together. These people did not know me from, a hole in the wall prior to seeing that content. So there's definitely something to it, but you want to be efficient and effective with it, right? You want to be efficient and effective with it. And so I'm going to, I'll show you exactly how
I'm day on creating a video. Basically.
What's that, Jordan?
So you don't want to spend your whole day creating videos. You
Exactly.
Prospect.
Exactly. Yep. Mike says, are you just using a mortgage calculator to get a loan amount and 75% rent to generate a quick property qualifying net sheet? You know what? So why don't we'll Jordan and I will come up with maybe a little calculator that we can share for tomorrow, or some simple best practices for that, or maybe Jordan has some resources that he can share on that. I actually have access to a platform where I can plug everything in, and it'll kind of spit out a PDF and give you a breakdown on cash on cash return, monthly cash flow, the 10-year monthly cash, or the 10-year total cash flow, the 10-year projected appreciation, etc. But there are probably some easier, like quick and dirty ways that you can at least get an idea. Is this going to make sense with a DSCR loan? Like, can we at least get it to 1-to-1, right? Can we get a 1-to-1 ratio and have it make sense? So we'll not to shove off that question, Mike, but we'll organize our thoughts and ideas around that and share on tomorrow's session in the afternoon. Some simple best practices for that. All right. Well, Jordan, thank you for hopping on a Monday. We will we'll get the link to join us tomorrow afternoon out later today or first thing in the morning. We'll be back tomorrow, same time, same place for Texting Tuesday. And I hope you'll all join us in the afternoon as well at 1 Eastern. And we'll do a deeper dive on DSCR loans and how you can sell more homes in 2024 using these and maybe grow or get started with your own real estate investment portfolio using them as well. Take care, and hopefully see you all tomorrow.